Hey everybody, how are you doing? Good afternoon from Brooklyn, and welcome back to the Biotech Capital Compass. It's a video companion to our latest Biotech Tape Check, where we step back and look at the sector as a whole, what's actually happening beneath the surface. We're at an interesting moment. Earnings season is behind us, geopolitical volatility is rising, and biotech isn't really breaking down. And so, instead, it looks like it's consolidating. So the question for today is simple. What is actually driving the biotech tape right now? My first section, I'll call it the seasonal reset. Let's start with something we've talked about before. Biotech has a rhythm early in the year. JP Morgan sets expectations. There's a healthcare conference based in the Bay Area in the first third of January, and there are a whole other set of healthcare conferences around it. Then after JP Morgan in early January, earnings grounds those expectations. Earnings starts at the end of January and through February and March for biotech. And then finally in February and March also becomes a digestion phase. A lot of information comes out, in January, in February because of investor meetings, earnings calls, et cetera. And this period often feels weak, but it's not necessarily fundamental deterioration. And that's the seasonality we've been talking about for a long time. It's the market recalibrating. What guidance was given? What was not said? Which companies are executing versus storytelling? And importantly, this is when capital starts to matter more than the narrative. This year is no different. Now, let's talk about risk appetite isn't gone. So when we look at now, we're basically into the last third of March, we're getting there. We want to see what's going on, especially with this armed conflict in Iran, which started it just over 3 weeks ago, and see what it's doing to biotech, which is a classic, in many ways, risk-on kind of sector. Now, here's where things get interesting. Even with a softer, broader market, geopolitical tension rising, biotech is not behaving like a risk-off sector. When we look at ETF performance, higher risk funds like BBC are still outperforming. More defensive biotech like the IBB is lagging. These are ETFs. Now, this is not a perfect signal. The BBC is smaller, more volatile, and thinner traded. So in biotech, early signals often show up in the highest risk parts of the market first. And biotech is quite segmented all the way from micro-cap biotech to small cap clinical stage companies, even some preclinical stage companies to sort of companies on the verge of having products approved, and then also companies, with approved products. So again, as I said earlier, in biotech, early signals often show up in the highest risk part of the market first. So what does that tell us? At a minimum, risk appetite inside biotech hasn't disappeared. It's just become more selective. Now let's just take a look at the technical picture. And here you just see consolidation, not really breakdown. Let's look at the tape itself. On a 2-year basis, the XBI still looks constructive. The recovery from the early 2025 trough is intact. Longer-term moving averages are still trending upward. So structurally, biotech is still in a recovery phase. But let's just zoom in, and we do this in the newsletter that we published a couple of days ago. Over the past few months, we're still range bound, roughly 122 to 130, repeated tests at both ends. That's not trend behavior, that's consolidation. So short term, we saw a pullback in early March, likely tied to broader market volatility, but importantly, no panic selling. Volume hasn't spiked aggressively, momentum is stabilizing. So the takeaway here is simple. This looks like digestion after a strong move, which happened in the second half of last year, not the start of a new down cycle for biotech. Now let's talk about sentiment. This is split, not broken. If you look at institutional coverage, Bloomberg, top-ranked stories, the focus is policy uncertainty, FDA developments, ETF flows. In other words, capital and regulation. If you look at social commentary, you see something different. More skepticism, more macro concern, but also selective optimism. We see a lot of darkest before dawn type of positioning, especially on the Twitter sphere. Insider buying commentary, selective ETF exposure commentary. So sentiment isn't bearish, it's divided. And that matters because markets often turn when sentiment is negative, but when it becomes one-sided. So markets often do not turn when sentiment is negative or only positive. It often when sentiment becomes one-sided is really when that adds to whether a stock or a sector goes in one way or another. So we're not there yet. From the sentiment perspective, what we're seeing in biotech is still it's divided. Now, in terms of volatility, this is the quiet signal. We analyze this from time to time, and this is one of the more interesting signals now. In biotech, in general, in the markets in general, but especially now with the armed conflict going on in the Middle East. Historically, when biotech volatility spikes, the XBI tends to fall. We saw that clearly in early 2025 at the sector trough, and other instances, and we point this out in the newsletter in our fundamental analysis there. And by the way, our newsletter is paid for, which is why we have these free video companions to help those that are still not ready to commit to maybe being a paid subscriber to the Biotech Capital Compass. But now volatility is creeping higher. The XBI is going sideways. That's a divergence. What does it mean? It likely means investors are pricing in more uncertainty, but not exiting positions. So again, caution is rising, but conviction hasn't broken. Let's talk about capital flows. There's just selectivity everywhere here. We analyze this in the newsletter also in depth. And let's just kind of zoom out here to where capital is. Two key areas, M&A, deal value is holding up. The deal count is declining. Deal value is holding up, deal value is declining. This translation is capital is still there, but fewer companies are getting in. Equity financing. These are IPOs, secondary financings, et cetera. Same pattern, $12.5 billion raised with the first quarter almost done. It's respectable, but deal count near multi-year lows. So again, the same theme. Capital is not gone, it's concentrated. And that has real implications. Strong companies still get funded, weaker ones may struggle. So what does this all mean? Bunch of little signals here or there, sort of everywhere. Want to bring it together, and our conclusion, from having done this for a long time, and I love these biotech tape checks because it teaches me a lot also about the sector. Sometimes things I might already know, it underlines them, and it teaches me new things. And then, sort of where does this leave us? Biotech today is not breaking down. It's not fully risk on. It's not illiquid. Instead, it's in a selective consolidation phase. This is really important. It's driven by three phases, this selective consolidation phase. Expectations resetting post-earnings, capital becoming more selective, macro uncertainty rising but not dominating. So this consolidation phase is something that's been going on for a while. We pointed out since we sort of started writing our newsletters in October of 2024, but the consolidation seems to be getting closer and closer to the end. I said at that point we're probably in the 7th or 8th inning of the biotech consolidation that started in essentially 2021. And we might be in the 8th or 9th inning now because the consolidation definitely seems to be slowing down, but you still see that consolidation going on. The next move in biotech will likely come from clinical catalysts, capital reopening more broadly, or a shift in macro volatility. Until then, this is a market that's waiting. So if you found this helpful, the full newsletter breaks this down in much more detail with charts, data, and deeper analysis. Full disclosure, that's a paid-for newsletter among our paid-for series. And people who pay for the newsletter for the Biotech Capital Compass make it easier, to publish. And then also a lot of the costs that go, into publishing this newsletter, third-party sources, et cetera. So as always, thank you for being part of the Biotech Capital Compass. Take care and have a good day.